We have been long-term stock market investors for years now. Like most people, we started with our employer-sponsored 401k plans.
These accounts gave us the opportunity to invest in mutual funds for the benefit of our retirement. What's up, Legacy Builders? I'm Rob.
I'm Reshawn.
And this is Learn, Hustle, Grow.
We help you build wealth and explore entrepreneurship so that you can leave a legacy.
She's a stock trader.
He's a realtor.
And we are debt-free entrepreneurs.
Very few 401k accounts allow access to individual stocks or ETFs. So later, we opened a taxable brokerage account so that we could begin to explore.
As high-income earners, we made sure that we kept our stocks at least a year so we could limit our capital gains tax to 15%.
When we left our corporate jobs in late 2018, we moved the money from our corporate 401k accounts into individual retirement accounts.
In late 2020, we enrolled in the VIP Trade and Travel course in hopes to in learning how to trade stocks so we can create another stream of income.
It wasn't long before we realized that we could implement the new information we were learning to also help grow our retirement accounts.
Yep. When Rashawn shared her IRA results in the student-only Facebook group, she got plenty of questions.
We are going to share those questions and the answers to those questions in this video.
Disclaimer, we are not licensed financial advisors. We are not offering investment advice.
That's right. We are simply independent investors who have chosen to share our personal experience.
Let's start with how we define trading versus investing.
Trading, to buy and sell a stock or ETF during a short time period, usually less than 12 months. Investing, to buy and sell stocks, ETFs, or mutual funds for the long haul, most of the time, more than a year.
So each time you leave your job, you have an opportunity to take your 401k and move it to your new employer's 401k, or you have an opportunity to roll it into a rollover IRA.
Now that you have that bit of background information, let's move on to the questions and answers.
First question, if I already have an IRA, is that where the money from the 401k goes?
Good question. The answer is no. A rollover IRA is separate from any other IRA that you may already have. You can have a traditional IRA, a Roth IRA, and a rollover IRA all at the same time.
Okay, next question. If I have more than $6,000 in my 401k and I want to roll that into my IRA, will that exceed the contribution limits for the year?
Another great question. And the answer is no. You can actually move 6 figures into your rollover IRA and not exceed the annual contribution limit. That doesn't count as a contribution for that year. So you can roll over hundreds of thousands of dollars and still take advantage of the $6,000 contribution to an IRA.
Awesome. Okay, so if my trading profits in my IRA exceed my contribution amount, does that count as my contribution for the year?
No, it doesn't. Just like the funds you deposit into a 401k, the funds in your IRA are intended to grow to help you retire. That can only happen if you invest those funds. So your profits in an IRA are not counted as your contribution amount for that year.
Couple things to keep in mind. In 2020, the maximum IRA contributions is $6,000. April 15, 2021 is the cutoff date for those contributions.
Now, I mentioned earlier that you are allowed to have multiple IRAs. While that's true, the maximum contribution across all IRAs is $6,000. For example, I have a Roth IRA, a traditional IRA, and a rollover IRA. I cannot deposit $18,000. No. I'm only allowed to deposit $6,000 for the year of 2020.
So why not just move my 401k to my new employer's 401k instead of an IRA?
It's a good question. The truth is, the difference is the number of options available to you. We mentioned earlier that in an IRA, you can actually invest stocks, mutual funds, and ETFs.
If you are not comfortable with buying individual stocks, Mutual funds and ETFs spread your risk across multiple stocks.
So, why would we choose to invest in individual stocks within our IRAs? Well, we've got a few answers for that.
The first reason, we can buy and sell stocks and options without paying taxes on the profits.
That's right. It's the exact opposite of when we're trading in a taxable account. By the end of that year, you have to pay Uncle Sam, the IRS, either short or long-term capital gains taxes.
Even if you're in and out of a position in 24 hours, all profits in an IRA are considered long-term.
That's right. There are no taxes due on profits in an IRA until it's time to withdraw those funds. With a couple of exceptions, the earliest you can withdraw money from an IRA penalty-free is 59 and a half.
Through trading stocks, we have more control over our own profitability.
We're going to show you a couple of screenshots. The first is an example of our performance year to date in one of our IRA accounts. You'll see here that we've actually exceeded the S&P 500 year to date. Next, we're going to show you the VTSAX. VTSAX is a flagship mutual fund within the financial independence community, and it's done great, but you can see here that we've also exceeded the performance of that fund. Now, there are individuals who traded strictly within the tech market this year or put everything on Tesla, and 2020 was a great year to take those risks. If you did that, congratulations to you. You have made goo-gobs of money.
When investing in the stock market, you don't realize your loss or profit until you sell your position.
Those funds that are invested actually go up and down with the stock market.
When there's a big downturn in the market, like there was in March 2020, some people hold on and wait for the return. Others panic and sell at the low.
That's right. When we sell something at the low, that means we're experiencing an actual loss. That is a realized loss. We refuse to sell at the low in our IRA accounts. We hold on for the return.
Before learning to trade stocks, our only investment strategy was buy and hold investing.
We now appreciate the fact that when we sell our positions, we are realizing the profitability, and that money is in cash. That means that if the market does go down on the remaining positions we have, at least the cash we have is holding steady.
We are never 100% invested. We always keep cash on the side to take advantage of opportunities when the stock prices fall.
As you might guess, mindset is a huge factor when it comes to trading stocks. Day trading refers to jumping in and out of a single position within the same day.
Most day traders are focused on a daily revenue goal.
When you are learning to trade stocks, watching the stock market go up and down on a daily basis can be both exciting and stressful.
Indeed. In an IRA, there's no rush. If my stock doesn't reach my goal, then I'll hold it for days, weeks, or even a month.
Short-term trading that exceeds a day trade is referred to as swing trading. Swing trading is ideal for trading in an IRA.
As full-time entrepreneurs, we day trade and swing trade.
We found that learning to swing trade in our IRAs kind of gave us a low-pressure way to learn to use the tools that are available and to observe the stock market in all of its ups and downs while making money.
Before we tell you how to get started, we are going to repeat our disclaimer.
We are not licensed financial advisors. We are not offering investment advice. We are individuals who are sharing our personal experience.
First, select an online broker such as Fidelity, TD Ameritrade, Schwab. There's plenty of them out there.
You can open your IRA online, or if you need help, feel free to call support for assistance.
If you have a 401k parked at an old employer, you can roll it over into a rollover IRA.
If you are using mutual funds at your 401k, you might want to consider cashing those out and moving the entire cash balance to the IRA rollover.
Next, enroll in a course to learn to trade stocks.
Remember, education has been key in our overall success. We would not have taken on the additional risk of trading stocks if we had not found a great course.
If you prefer not to invest in trading education, remember ETFs are a great way to invest for retirement.
We say ETFs because most mutual funds fail to keep up with the S&P 500 index when it comes to performance.
Research index-based ETFs.
When you find the one that's the right fit for you and your investment strategy, put your money in and just hold on through the market ups and downs.
In general, index ETFs have lower fees and higher returns than mutual funds.
Interested in learning more about the VIP Trade and Travel course we're enrolled in? We'll include links to both the course reviews we've provided thus far and a link to where you can enroll in the course in our description below.
See you in the next video.